Good morning, everyone. This is Marshall Gittler bringing you the morning comment for November 27th. Today's OPEC meeting is unlikely to reach a convincing agreement to cut production, in my view. In October, the group pumped about 31 million barrels a day, almost 1 million barrels a day over their self-imposed quota. Saudi Arabia actually increased its output in October and cut prices for the fourth month in a row, even while prices fell. In order for OPEC to cut its overall output, even just back to its quota, Saudi Arabia would have to resume its historical role as the swing producer. Its recent behavior, though, has been quite the opposite. It seems intent on driving prices down, perhaps to force expensive U.S. shale producers out of the market and to punish the Russians who are supporting the Assad regime in Syria. That's why I expect prices to fall further. Moreover, the demand picture is pretty negative for oil prices, too. Demand usually falls in the first quarter because of seasonal factors. Plus, with Europe stagnating and growth in China slowing, the U.S. alone can't boost overall demand, as U.S. energy usage has been falling. On top of which, the strong dollar increases the price of oil for consumers outside the U.S. and further dampens demand. Eventually, OPEC will have to cut production, but I think it'll take more pain to get to that point. The best that the group can hope for at today's meeting is probably a reaffirmation of its current quota, but unless it can convince the market that it is going to cut back production to that level and stick to it, the news isn't likely to boost prices significantly. Cheaper oil does help some countries. The U.S. is a major beneficiary, as gasoline prices tend to move closely in line with oil prices. Europe not so much, as taxes are higher. Many EM countries that import oil, such as Turkey, Thailand, Korea, South Africa, and Poland, will also be beneficiaries. Of course, the currencies of the oil-producing countries, Canadian dollar and Norwegian krone in particular, are likely to suffer, as may the ruble and Mexican peso. Today's other events, with the U.S. on holiday today because of Thanksgiving, dollar weakness may continue in the absence of any dollar-positive news coming out. The key event today will probably be ECB President Draghi's speech in Finland. However, he's spoken several times recently and surprised the market with his domination already. It's hard to imagine that he has anything left to reveal. ECB Governing Council member Jens Weidmann also speaks in Germany. It'll be interesting to contrast his comments with Draghi's. The main release during the European Day will be the German CPI for November. As usual, several of the Länder released their figures before the national figure is released. We'd look at the larger ones for guidance on where the headline figure is likely to come in at. The consensus is for a softer figure than last month, which could push down estimates for Eurozone CPI, which is to be released on Friday. Also, the German unemployment rate for November is expected to remain unchanged from October. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.